here at Worcester, the Worcester Central Regional Office at Clark University, and thank you all for attending today's meeting. Just one second. So I have Sarah Dorn, our office manager, will be participating today. She's going to make sure she'll have some instructions for you at the end with some handouts and so on. And I'm going to be talking for the next, I suppose about an hour or so, maybe an hour and a half. Let's see how far this, how long, let me see how long we had scheduled this for. Let's see. So.
Rich, I believe we schedule it from 10 to 11:30, just
10 to
allow
11:30.
time
Okay,
for
thank you very
chitty chat
much.
at the
Okay,
end.
so this is it's how to start a business in Massachusetts legally, and what I'm going to do today is really kind of talk at the proverbial 30,000 foot level. There's a lot of elements that go on in starting a business, and you'll find that at the very least, most people will discover that to open a business, you'll be juggling a lot of balls at the same time. It's not that simple to do one thing, 1, 2, 3, A, B, C. There's a lot of elements taking place simultaneously. That's one of the challenges of being an entrepreneur, but of course, being an entrepreneur can also be extremely rewarding. And as we go through the presentation, I usually will harken back to certain vignettes or experience that I had. I've been doing this since 1992 and discovered some very interesting aspects about starting a business and some things that are very good, some things that are not so good. So we'll just kind of go along with this PowerPoint. If you have questions, I think we're going to manage it by going into our chat, and Sarah will let me know about any questions near the end. And I promise you, if I don't get an answer to you today, I'll certainly respond to you via email and I'll answer any questions you may have. So we're part of the Small Business Administration. You see down there at the lower right. We actually have 6 locations in the state, starting from the west in Pittsfield, Springfield, Worcester, Salem. The newest center is in Newton and one in Fall River. We also have a center that deals with the Procurement Technical Assistance Center and international marketing. We also have a center that deals with government contracting. So the one here in Worcester is one of the largest, certainly because we are actually in the second largest town or city in New England. So let's kind of move on if we can. There we go. So again, this is going to be a kind of trying to put this in a way, in a kind of in the order that I would normally kind of approach this if I were starting a business. And first of all is to gather information and really take a good hard look at yourself. When we talk about research, we're talking about primary research, we're talking about secondary research. And I know some people might get a little bit concerned about, well, do I have to go to a library? Am I required to do this? And there's no requirement, but you do want to do some research on your organization, and we'll kind of get into that as we go along. So what can help you? Well, here in the city of Worcester, there's the Business and Community Development Division, the town, and the city of Worcester has, I think, done an excellent job providing a variety of resources that can help any small business owner or nascent entrepreneur, as we call them, people who want to open a business, can help them. There's actually, as I mentioned, we are part of the SBA and the MSBTC at Clark. We certainly help you. The Worcester Public Library and any college or university with a business school can help you. And of course, it shouldn't be lost on anybody that in Worcester, I believe there are 8 colleges, if I'm not mistaken, many of whom can have resources available to help. And of course, lastly, but certainly not least, is SCORE and CWE. These are kind of our brethren, if you will. They're part of the Small Business Administration. SCORE, which happens to stand for the Service Corps of Retired Executives, and CWE, which stands for the Center for Women and Enterprise, provide very similar service to what we do. They're a little bit different. I know SCORE they're volunteers, while we're not, and we are obligated to pursue professional development every year. So getting into the self-assessment, I think this is an area that is really kind of critical, if you ask me, because it really deals with so many aspects of opening a business, one of which is the ability to secure startup funding from an outside source, such as a bank. So, for example, the number one would be experience. Do you have experience in a specific industry? Do you have experience in general in running a business, or have you worked in a business where you've managed the books, made purchases of raw materials, inventory, and so on? So one of the stories I tell constantly, because it's happened year after year after year, I get people sometimes coming into my office and asking or saying, "Well, I'd like to open a restaurant." And after some discussion, we discover that, okay, you haven't had experience as a sous chef or as a prep cook or in the front end or back end, but what your experience consists of is going out to eat Tuesday, Wednesday, and Thursday of each week. That is not the kind of experience we're talking about. So you need to have experience in the business. If you don't, I suggest you get it first and then determine if this is the kind of business I want to be in, the industry I want to be in. In terms of personality, it's really, I start with the ability to sell. All right. Can you manage people? Can you inspire people? But we'll come back to managerial as the next bullet down. The personality, I'm really talking about selling. When you start a business and you may hire people, you may define yourself as, I'm an artisan, I make food, or I manufacture things, or I own an HVAC company. What you really are, first and foremost, is a salesperson. Nobody is going to sell your business or your service better than you. So the idea is you don't have to necessarily say, I'm a salesperson, but you can't back away from it either. So you can't say, well, I'm not a salesperson, I have somebody else sell for me. That's not going to work. So you have to be comfortable with that. You also have to be able to manage. You have to be able to manage tight money control, the employment of resources, and the ability to coordinate the work of people. Now, if you open a business and you're a sole proprietor, and by that I mean I don't mean that in terms of the organizational structure, but rather I'm the only employee I have. Obviously, managing yourself is not what I'm getting at. But as a business, if the business grows, inevitably you would be hiring people. I mean, it just stands to reason. 9 out of 10 times as a business grows, it's going to require the embracing human resources. And doing so means you're going to have to coordinate the work of people. You're going to have to be able to inspire people, manage people. In some cases, that's good news and bad news. And you certainly have to be able to manage money. So if you have trouble, for example, day in and day out, or week in and week out, balancing your checkbook, I'd say you might want to take a good hard look at whether or not being a business owner is going to be right for you. You have to be able to manage money. Doesn't mean you have to be an accountant or CPA, but you should understand how bookkeeping works. And we'll get into that maybe a little bit later. These last two are, I think, to me, are very intriguing and critical. Vision means the ability to react to trends and changes in the environment. So a story I tell, I've told it a million times, but it's so true. We live in 5 basic environments. We live in a political environment, social environment, legal environment, technological, and an economic environment. If you consider the world we live in, and you just think of the news every day, it revolves around one or more of those 5 environments. Businesses operate within those environments. So one of the things that an entrepreneur needs to do is react to the environment. I had a client out of, actually, that person was located in Groton, Connecticut, owned about 1,000 vending machines along the coast of Connecticut up to Old Saybrook. Made a lot of money selling candy and other products, including cigarettes, out of these vending machines for a number of years. And what that person failed to realize that the federal government was about to pass a law making it illegal to sell cigarettes in vending machines. And overnight, he lost about 60% of his gross revenue. Now, the good news was the person was able to eventually recover, but he had literally laid off his entire staff, and he did not see that coming. And so the ability to see problems, or better yet, the ability to see opportunities, that's the vision we're talking about. And finally, the courage. Courage to stand up to adversity, to be able to make difficult decisions and make decisions based on incomplete data. This is one of the hallmarks of being in business, by the way. You know, when we talk about this pandemic, which we're still experiencing, been around for the last couple of years, and you might have recalled listening on the news all the time to the CDC talking about we're gathering information, gathering data, and we're going to make our decisions based upon science. And science typically says we're going to wait until the facts reveal themselves or emerge. That isn't the case in business. Quite often, we're faced with making decisions on a time frame. I've got to make a decision by Thursday afternoon. So between now and Thursday afternoon, I have to gather data, and I may not have complete data. So the point is, you have to have the ability, the courage to make these difficult decisions. And sometimes you're going to be right, sometimes you're going to be wrong. That's inevitable. And one of the other hard decisions would be, again, dealing with people, which we'll probably come back to. So another consideration is selecting a business site. Now, this conversation usually revolves around a retail or manufacturing location outside the home, but choosing to do your business out of your home also requires some serious consideration. Obviously, zoning regulations come into mind, and you'll see that here down and later on in the third bullet down. So it's really all about the extent to which the location is strategic to the business. Does the location of your business impact your value-added proposition? And I want to come back to this value-added proposition in a second. I might talk about it right now, but I just want to get through this slide. We'll come back to that one because that's a very important. So what do you want to consider? Budget is one, target market, and zoning regulations, okay? So all towns, all municipalities have zoning regulations that you must abide by. In some cases, you'll have residential zoning, commercial zoning, a combination zoning, agricultural zoning. And if you're running a business that may not have or may involve a significant increase in traffic to your home, even though you may be zoned. Well, if you're zoned residential, and you'll have to get a waiver, and of course this goes to your neighbors, and increase in traffic, that may not work. So you have to really be careful about the zoning issues, and also more importantly about the budgeting issues. And I think the most important issue would be the target market and your ability to get to your target market. So for example, again, another example, I started doing this work in Connecticut years ago. And I don't know if anybody is aware of this town called Willimantic. It's in Northeast Connecticut. And it's an old mill town. The old American Thread Company was there. And I had a client who wanted to open up a used car lot in that town, which I thought, hey, great idea. Until he told me what he was selling, which was going to be Maseratis, Lamborghinis, and Ferraris. And anybody who knows the Willimantic region knows that those cars aren't going to sell there. I mean, maybe once in a while, but the target market, can be found in Southwest Connecticut, where there you can find Greenwich and Darien and those cities close to New York. That's where the target market exists. So you have to be able to identify your target market. You have to be able to reach your target market. When you talk about your value-added proposition, there are three main components to that, and are very, very simple in words, but they require some significant thought. First, your value-added proposition. What are you selling? Right? What's the product? What's the service? And secondly, to whom are you selling it? Who are these people? Define them, their target market, if you will. And third, why are they buying, or why would they buy from you? And we're going to come back to this because this requires, I hate to use the expression, but unpacking, because there's a lot more to that than what I just described. So you have zoning regulations. Obviously, you have licensing, permitting regulations that you have to abide by, and those the zoning is at the local level, but the licensing and permitting could be at the federal level as well as the state and maybe even the town. So obviously, if you're doing something that has to do with food products, you're dealing with the Department of the health department. They have to certify the kitchen and where you're going to be preparing food. This particular PowerPoint is one I've used over the years to deliver this presentation in Worcester, and I do it sometimes in Southbridge. So there's a lot of Worcester involved here. So I'm going to say this last point. Some cities like Worcester provide a site search assistance program. The program that Worcester provides is outstanding. It takes a lot of the work out of where do I go and what do I do and where should I locate my business. Worcester helps out dramatically. That's what I had mentioned before about their commitment to helping entrepreneurs open up business in this town. Other towns may have the same service, but I can't speak for them. So I must apologize up front that this has a lot to do with Worcester and Worcester County, as opposed to if you're coming from Nantucket or Williamstown up in the Northwest Hills, that may not be the case. Again, okay, licensing, permitting, zoning. Obviously, I just got ahead of myself. License permits for their operation are required by many businesses. Different departments have different authorities, many towns. So the point here is you need to go, first of all, go to your town and do the research there, then the research for your state, and then at the federal level. And again, I mentioned that before. In Worcester, I include this contact information. You will be receiving this PowerPoint, so you don't need to copy this down. The Department of Inspectional Services, which is their contact information, their address, telephone number, and web page, and the Division of Planning and Regulatory Services, again, their address and their telephone number and their web contact. And I believe that Worcester also has a one-stop opportunity where you make an appointment and they can bring all of the necessary departments that are going to have an effect or have a bearing on your business. They can come together in a meeting rather than going step by step by step. One of the things they do in Worcester is try to make things much smoother. So this is a simple sheet here, number 6, but it has an awful lot of material here. It's going to take some time to get through it. So a business plan / funding proposal. Let me start there first. When I started doing this, I was teaching at the University of Connecticut, and I taught there for 26 years and at the graduate level, and I taught a number of different classes, but I did a lot of work on venture management, and I had students hand in business plans. And as a good graduate student would do, their thought was more is better, which is not necessarily the case. I would get 50, 60, sometimes 65 pages of very interesting information, but that is not what we are talking about when if you get a referral to me from a bank that says, you'll go to the SBDC for this business plan. We don't write business plans, but we'll help you create one. And what I'm calling it is a funding proposal, because if nothing else, it's much shorter. So the funding proposal that I work with on my clients has actually 2 or 3 components. One component is the narrative. The second component is the financial model. And the third would be the appendix. And the appendix is just an area or a section that contains all of the material and the accounting path, if you will, that supports all the information within the narrative and the financial model. So, for example, if you've got an insurance policy, you might put a copy of that in your appendix. Okay, so this is a roadmap. Its purpose is to help you focus in on what you're trying to sell, to whom you're trying to sell it, so on and so forth. And it also secondarily is your application for funding. When you go to a lender, they're going to ask you to fill out a number of documents and provide this business plan, this funding proposal. And even if you didn't go to a lender, if you're going to go to your cousin or your aunt or your uncle or your best friend to borrow money to invest in your business, you should provide this document anyway, because the value is to you, and it represents the anticipated or estimated economic impact of your business in year 1, years 2, and year 3. So what is this contain? Okay, first of all, the narrative, which is your story. It deals with, again, your value-added proposition. What are you selling? To whom are you selling it? And why are they buying it? So let's unpack this a little bit. When we talk about what you're selling, I have another vignette, another story. Again, true story. Years ago, there was a company called Revlon. It was actually formed by a fellow named Peter Revson, who, by the way, was actually a very successful IndyCar driver, I believe, in the 50s and 60s in the country. And he formed the company called Revlon. And you all know that if you remember Revlon, they sold cosmetics. Well, like many companies early on, first year, second year of operation, they weren't selling many products. And Mr. Revson brought his sales team together to ask a few questions, namely of which was, do you people know what you're selling? And when he asked the question, they said, well, yeah, we're selling cosmetics. And he said, no, the answer to that question is you're selling hope. Now, I find it kind of amusing, but I think there's a lot there. Because what you're selling is the attributes of the product or the service. It's the value to your customer. That's what you're selling. There's an old saying sell the sizzle, not the steak. Obviously, if you're selling a variable speed reversible drill that's 1/4 inch and has a battery associated with it, you're not selling the drill, you're selling the ability to create the hole that the drill would create, or maybe or screw the screw in that the drill can provide. So the value added proposition, what are you selling? I identify the attributes to the customer. Who are you selling it to? That's the target market. Now, if you see right next door to that is the demographic profile. The demographic profile of your target market represents all of the data that is quantifiable. So, for example, if I'm selling cosmetics, go back to the Revlon example, who would be my target market? Who would be most likely to buy? It's probably women, 80%, 85%. Yes, men would buy Revlon products for gifts to their spouse and so on and so forth, but primarily it's women. And what would be the age group? Well, I don't know, 25 to 45, 55 to 75. But you see what I'm saying? You can break this down into all quantifiable information. And what you're trying to do is ascertain two things. Well, actually one, really, it's the critical mass. In other words, is the marketplace, the demand for what you want to sell, is it being met by the current supply, the people in the competitive set, right? So I'm not going to ahead of myself here yet, but you have to determine the extent to which there's market equilibrium, which is just another big way of saying supply and demand are relatively equal. And I'm going to come back to the impact of that particular aspect of the marketplace, if supply and demand are equal, or if they're not, and what the implications are to you. But we still want to determine, really, one thing: how many people are in my target market, and is it enough to make my business successful? Clearly, if you're selling on the internet and you're selling worldwide, then this kind of is a moot point, because clearly there will be enough people. But nevertheless, you still want to be able to reach those people. So in addition to the demographic profile, which, by the way, is nothing but census data, you want to add another type of profile, which I don't write down in here, because for one thing, people don't really recognize it all the time, but I think it's extremely valuable. It's a psychographic profile. So if you just take out the DEMO and put in PSYCHO, like in psychology, then you'll have another type of profile. And this is not quantifiable, it's qualifiable. So what are the elements of a psychographic profile? The people that you identify as your target market, they have values, they have attitudes, they have belief systems. The more information you have about your target market, the more you can, the more data you have that helps you define them, the better off your marketing plan will be, your social media marketing plan. The kind of language you use that's going to attract your customers and your clients. So the two types of profiles are going to be extremely helpful. The demographic profile is easy to ascertain because you can go to every single town's webpage and they have a census data section. On the psychographic profile, that's based upon your intuition, your experience, your knowledge. That's not something you really research. It's completely intuitive. right? So the more experience you have, the more knowledge you have about that market, about your target market, that constitutes that psychographic profile, the better off you're going to be in knowing and understanding the behavior of your target market. I also mentioned now the competition, or I did mention the thing about a market equilibrium. So if the marketplace supply and demand are relatively equal, that is going to create a fair, I would say, somewhat serious barrier to entry. So when we talk about the competitive set, we're talking about actually here doing what is called a SWOT analysis, SWOT. So you look at the competition in your marketplace, and if you're selling a product and you're located, say, at a retail location, you might want to draw a circle around your marketplace, which creates, okay, people will come for 20, 25 miles to come 30 miles. How far will people go to you? You're at the center of that circle, and then are there other competitors within that circle or near that circle? And you want to identify two things about your competitors. And by the way, when you talk about your competitor, again, this is your experience, your knowledge of the competition. And that you may want to identify 3 to 5 key competitors. What do they do well? That's called their strengths. And what do they do not so well? That's called their weaknesses. There's the S and the W in SWOT. If they have strengths, that's going to threaten your business. That's the T in SWOT. If they have weaknesses, that's going to present opportunities for you. That's the O in SWOT. So strengths, opportunities, weaknesses, threats. You want to be able to identify what are the weaknesses, what are the opportunities for me in this marketplace? And that is going to, in effect, define your market niche. Now, you may not want to pursue that particular market niche because you have other plans instead, which is your prerogative, but it's good to know where the weak spot is in the marketplace and the extent to which the barriers to entry are ones that are not particularly high. If you have supply and demand relatively equal, pretty much the only way you're going to be able to enter that marketplace is based upon price. Now, there is another process involved here where you could create new users and expand the size of the demand, which could be very fulfilling and it requires a lot of creativity. But probably the best way to enter the marketplace and establish a beachhead or a spot in that marketplace is to price your product or service a little bit lower than the existing competition and induce trial. That's what you got to do. We have to induce trial. All right. And we're going to come back to that when we talk about the marketing mix. The other things I want to talk about here real quickly would be organizational structure. Whether you be a C corporation, S corp, LLC, etc. We're going to come back to that at a later date. We have another page on my PowerPoint to talk about that. And what else could you include in your narrative? Identify your management team. You need access to an attorney, an accountant, an insurance agent, a banker, and I suspect I would recommend a fifth person being your business generalist. That would be us, or SCORE, or CWE, or some mentor that you can go to and get information or answers to questions you may have. Inevitably, all business owners are going to have some legal questions, and they're going to have some questions about strategic tax planning. So your attorney and your accountant, respectively, would be able to answer those questions. For example, if you hire people, and the question is, well, do I hire them as an independent contractor and give them a 1099, or do I hire them as an employee, maybe a part-time employee or seasonal employee? Which one of those should I do? Do I need to do? And that would be a good question, for example, for not only I can answer that question, but I think that would more importantly be a question you want to pose to your attorney. And by the way, I would always recommend get second opinions on just about everything. It's always a good way to manage your business. So the marketing list consists of the 4 P's of marketing. Here they are: price, promotion, place, and product. So starting with the last one, product, remember going back to your value added proposition. What are you selling? Right? What are the attributes? Again, I'm selling hope. I'm selling peace of mind. I'm selling. You want soft Corinthian leather? Yeah, we can provide that. If you recall back those ads for the cars. The place. Where are you located? Why is that strategic? If you're selling from again via the net, your location probably isn't that important. But if you're selling, say at a retailer location, you want to have significant traffic, foot traffic, and car traffic. If you're manufacturing, perhaps you need to be close to large transportation arteries. But the other one, promotion. How are you managing? How do you advertise? How do you manage? How do you promote your business? For example, in your social media marketing, what are your platforms? LinkedIn, Instagram, YouTube. Are you creating your own YouTube channel? You may even also be embracing some more traditional areas of advertising, such as media or trade journals, or maybe a billboard. So that's going to be addressed in this part of your narrative, that your story. And finally, price. And again, I leave it last because if there's more or less market equilibrium, price is most likely the best way to enter the marketplace. Now, one comment I make before we go on to the next slide: most entrepreneurs have a forward-looking, which is good, but I always warn people, keep looking behind you, because if you're successful in your first or second year and you're making a profit, it's going to not be unnoticed by other people, and people can come in right behind you and do the same thing to you that you might have done to the existing marketplace. So this is part of the narrative. Your narrative, 3 to 5, maybe 6 pages. When we talk about your management team, by the way, I don't suggest in any case you put anybody on retainer. You just need access to these people. Identify your competitors. We won't spend too much time here, but Michael Porter wrote this thing about the 5 forces. I don't know if anybody knows about Michael Porter, but he's pretty much a rock star when it comes to entrepreneurship and business development. He taught at the Harvard School of Business for years and was a prolific author and considered to be probably one of the key people in strategic planning and business development. So he talked about supplier power, buyer power, and so on. The ability of suppliers to drive up prices of your inputs, the strength of your customers to drive down your prices. And then I talk about it here. Does market equilibrium exist? Competitive rivalry, the threat of substitution. That's the extent to which different products and services can be used in place of your own. This kind of goes to the heart of what I was saying earlier about you're coming up with a new product or service, and you want to maybe market that to the marketplace as, hey, this is a substitution to the existing available services or products. This is what I'm getting at right here. Then there's the threat of new entry. That's the ease with new competitors can enter the market. If they see that you're making good profits, and what do? They drive the prices down. Because why? Well, how do they enter the marketplace? Lower the price. And that has a tendency to lower price, drive prices for everybody down. The old saying about all boats rise or fall with the same tide. By the way, one other comment about pricing, which is kind of real critical. What you don't want to do on pricing when you enter the marketplace is price too low. You want to price low enough to induce trial, but keep it high enough so when you do raise the prices back to what could be considered somewhat industry norms, it will not be a shock to the marketplace, and more importantly, a shock to your clients or customers. What you're trying to do here is not just induce trial, but then retain those customers and those clients going forward and create. Now you are the business of choice for them, not your competition. Oops. I keep going. Okay. This is an area that, again, I talked earlier about keeping a lot of balls up in the air at the same time. Some people talk about, well, what exactly do I need to do to establish a business? Well, from the SBA standpoint, there's a certain kind of a technical definition, if you will, by what constitutes a business start. So I'll tell you right up front, what you need to do are 3 things. One of which is establish an organizational structure, right? Register your business name and legal structure. Okay, that's one thing, which, and I'm going to talk about this in a second. Number two, get your EIN. Oh, this, I'm going to be redundant here. Get an EIN. Number three, establish your own business, a business bank account that's separate and distinct from your personal business bank account. So these are the most common organizational structures from which to choose. I'll describe the two extremes, and then I'll give you one that I think was what we normally would recommend for some basic reasons. But sole proprietorships, partnerships, limited liability companies, otherwise known as LLCs, corporations, S corporations, B corps. That last one, B corps, is relatively new. It also goes by the term benefit corporation, and we won't go into detail about that. But it's kind of an attempt to be a cross between a for-profit and a not-for-profit organization, and that's not one we normally will deal with. We can, if you have specific questions about that, I can get into that later. But two considerations here about organizational structure would be how it affects your tax requirements, what you pay for taxes, how much you pay for taxes, and the extent to which you protect your own personal assets. So let me start with sole proprietorship first, because that's relatively simple. With a sole proprietorship, your business assets and your personal assets are commingled. There is no differentiation between the two. Whatever you own personally, it doesn't matter if it's a business asset, like, oh, I have a sole proprietorship which owns a step band for my business. That's you. We own that personally in a sole proprietorship. That's from a liability issue. In other words, so all of your assets would be at risk if you got into serious trouble. And by the way, nobody is safe if you commit a felony. What I'm talking about is if there is a lawsuit brought against your company. And before I go any farther, I should also mention one thing about this whole business about liability. I'm a pragmatist at heart, and my feeling is you've got to take a good, hard look at your industry, determine to what extent do I need to really think about, do I form a corporation? Because you're going to have insurance to cover any type of problems that are created by your company. Obviously, if I'm a doctor, I have malpractice insurance. In other cases, you might have errors and omissions insurance. The insurance is what takes care of liability issues. So people wring their hands quite often about, oh my goodness, I don't want to lose my home. That's not going to happen, right? But it's good to consider that as you make your choice. So with a sole proprietorship, again, assets are all commingled. But from a tax standpoint, it's referred to as a pass-through structure. In other words, the money goes directly into the business as gross revenue. You pay your operating expenses. Whatever is left over is a profit, and you pay your taxes on that. There is no corporate tax. So let's go to the other extreme. That's the corporation, otherwise known as a C Corp. So when you see like Acme Incorporated, that would be a C Corp. And in a C Corporation, the business is a separate legal and distinct entity from the owners of that business. So going back to the example of the panel truck being owned by the business, that's owned by the business, not owned by the owner. The owner owns the business, but the asset resides with the business. So what does that mean in terms of liability? Well, all of your personal assets are protected through what is called a Chinese wall. So yeah, your business assets could be at risk, but nothing personal. Okay. But what about the tax implications? Well, you might have heard, things like Washington, wants to noodle around with a corporate tax, lower maybe to induce, economic health, well-being of our country. Well, and let's not get into that can of worms right now. But the point is, there is a corporate tax, and I believe it's at 27%. I think it used to be at 21. So what happens is a dollar comes into a C corporation, and the first thing is not necessarily the first thing, but that dollar has to cover its corporate tax. Whatever is left over, is pays for the operating expenses. Then now the owner gets what's left over, and then pays the income tax. So that dollar is taxed twice. So what's the alternative? Well, I'll jump to the chase right here. It's limited liability companies. It's the one that was designed years ago to kind of create the best of both worlds. Your liability is limited to your ownership interest in the business, and your tax issue, it's a tax pass-through. So just like a sole proprietorship, you're taxed that way. Money comes in, no corporate tax, and are your personal assets liable? Not really. Your liability is limited. But this organizational structure has not been around all that long, maybe 20, 30 years. And it varies from state to state. In Massachusetts, Connecticut, I believe most of New England, if all of New England, recognizes single member LLCs, but not every state does. Would it have an impact on you? Not necessarily. Should you form a partnership or an S corp? You could. By the way, I suggest people form an LLC, and then they can choose S corp when it comes to paying their income taxes, because it actually reduces your income tax, puts more cash in your pocket. Won't get into detail about how that works, but it does work. Why do we suggest LLCs? Because LLCs are very simple to form. It costs $525 to form in Connecticut. You go to the Secretary of State webpage, drill down to where it says forming an LLC. You pay $25 for conveyance fee, $500 to form the LLC, and then it's a $500 charge annually to maintain that LLC. Is it more than an S corp or C corp? Yeah, because normally with an S corp and C corp, I would recommend having your attorney do that formulation for you and going to the Secretary of State website.
Done for dedication in 11 weeks.
Now, one thing I should mention, because I always get in hot water with my attorney friends and our colleagues who are attorneys.
Yeah,
When it comes to the LLC, you can form it. It's only 7 very simple questions. But there's a thing called the Articles of Agreement, which I do recommend you work on and have an attorney review them after you form the LLC. So, and again, far more detail about that if you want to meet with us here, talk about it in more detail, or talk with your attorney. These are the organizational structures. Partnerships, again, it's the standard, partnership, like you'll have a partnership agreement versus a limited liability. In a partnership, you have the articles of, I think it's articles of organization. In limited liability companies, articles of agreement. So I mentioned before about the funding proposal and the assembly about the financial model. And so I want to get into this whole section on the financial model, and it kind of segues into where you look for financing for your business. Okay, the financial model. Unlike what I said before about business plan versus funding proposal, the financial model is really the heart of this document. Why? Because it illustrates the performance of the business. It contains a series of statements. All right. So you really want to have this financial document prepared for you as well as for the lender. So before I get into that, I just noticed I didn't finish my point earlier. Once you've established your organizational structure, you will want to go get an EIN, and then you want to establish your bank account, your personal bank account. Not your personal, but your business bank account. My point here is, under no circumstances should you ever commingle personal money, personal funds with business funds. You really got to keep them separate. So if you're paying, let's say you're buying a crate of paper for your business, you write it on a business check, not a personal check. Okay? All right.
Yeah, I can only do so much.
So what does the financial model consist of? Well, these are the statements. One is your source and use funds, and this really actually illustrates a kind of a consolidation of your startup expenses.
Excuse
me,
Rich.
Where do we start? We start actually with startup expenses. And we literally write a list. Let's say everything by item. I mean, you want to be as detailed as possible. What do you need to buy to start this business? Now, normally I'd say to people, start out as if you're writing a letter to Santa Claus.
Rich.
And
Rich.
yes.
Hi, I've lost my co-hosting ability. Can you ask that gentleman to mute himself or mute? Because I can't do
okay.
it.
Somebody, hi, make sure you're all muted if you could.
Yeah,
see
it's
what-
the gentleman on the phone, 401.
Yeah, okay.
I can't mute him because
Yeah, if whoever's on the phone, please just mute yourself because we are hearing you. So just make sure you're muted, okay? Thank you. So we start with a list of what company do I need to buy? And I said before, it's like a letter to Santa Claus, only the difference is once we write the list, then we go through the list and say, well, do I need that in year one? Or I can wait to buy that big piece of machinery in year two. As a matter of fact, in year two, my cash flow may illustrate the fact that I have the money to buy it in year two. I can avoid having a larger request for a bank, keep my loan down a little bit lower, keep my principal and interest payments lower. So we start with a statement of your startup costs. And once we've identified that, then we can go to your source and use funds. And what that represents is, here's what I need the money for,
Nelson.
and here's where the money's coming from.
Hi, Nelson.
So the source is where it's coming from.
Bobby.
Where do we
On
start?
the phone call last week.
Excuse me,
and
sir,
Bobby
whoever
asked me if I
whoever
could
is not
to
muted,
reach out to
please
you
mute
and
yourself.
see if I can be of help in the meantime because she's still out this.
I just muted the guy. Okay. I don't know how to make you calls. Okay. All right. So on the source, we start with you first, and then secondly, whoever is out there that's going to provide funds that's going to make up the difference between the startup costs and what you're going to provide. I'm not going to get into the 5 C's of borrowing quite yet. That'll come a little bit later, but you're going to have to put cash into this business. It's called equity infusion, or by the banks, they call it sometimes skin in the game. But we start with the startup expenses. The equity infusion is going to be more or less 20%. In some cases, it could be higher. It's depending upon how risky the business is. I don't want to scare anybody away, but the fact of the matter is 85% of the businesses fail in year one. And they fail for one primary reason, because they're undercapitalized. So they want to make sure you have adequate capital. You don't want to be bootstrapping. You want to avoid that. Bootstrapping is simply starting your business on less than adequate funding. If for some reason you're able to be successful, but quite often it isn't the case. So you'll need to come up with 20% at a minimum. If it's an SBA 7A or 504, the lender may ask only 10% in, and we'll get into that at a later date. But you look in your pockets first. Then you go to your friends' pockets and your family's pockets, and you go to all the pockets you can find until you run out of pockets. And what do you have left? You have basically debt financing from a traditional lender, or you may have an angel investor, or you may go seek out venture capital. Angel and venture capital are usually very high numbers, 3 million or more. Banks will go up to 3 billion for the most part. Some banks will not touch more than $1 million. Some might go over 3. But going with a venture capitalist or a angel investor usually indicates that it's a significant amount of startup costs necessary. So then what are the other critical components of this financial model? The other 3 statements, the income statement, cash flow, and balance sheet, we're showing years 1, 2, and 3 by month. So on one page, we're going to show year 1 and months 1 through 12. On the second page, it'll be income statement months 13 through 24, and so on. We want to show every month from month 1 to month 36 what this business will, well, we're estimating what this business will generate in terms of revenue and expenses. So the income statement, sometimes known as a profit loss, represents what your income, what your tax obligations would be. The second one, which is in bold, is your cash flow. And I bolded it for one very important reason. This is by far the most important schedule or statement that we're going to put into this model. It represents the flow of cash or money going in and going out of the business. So for example, in the income statement, which is a tax document, it includes a tax exempt items, for example, depreciation. And if you have a loan, the interest on your loan, these are all tax deductible. They're non-cash. Well, actually, the interest rate is a cash expense, but you can deduct it. The depreciation is a non-cash expense. In other words, it occurs, but you don't write a check for it. So on the cash flow statement, it only includes those items that indicate cash coming in and cash going out. It represents how much cash you have on hand at that business at the beginning or at the end of the month. The balance sheet represents the relative value of the assets of the business, any liabilities the business has, and the resulting owner's equity. The other schedules we could include, if you have a loan, there's an amortization schedule. If you have accounts payable or receivables, we do a reconciliation of that. If you're selling a product, like a food product, for example, we do inventory reconciliation. We'll do financial ratios if required or if necessary. We'll include a line of credit. And so you may say, well, I'm not going to get a loan per se. I'll just get a line of credit. Whereas, for example, if there's a lot of seasonality to your business, I might have maybe a $10,000 line of credit, but I'll use 5 or 6 or maybe 8,000 throughout the course of the year when business is down, and then when business is up, I repay my line of credit and so on. So I just want to again make sure we're clear on one thing: how important this financial model really is, because it will indicate at the end of the day, well, we show a profit, but unfortunately, it's for $2,000, and it's not going to be enough to live on. Now, what does that mean? That means, well, we're not going to open the business quite yet. And if anybody has a day job, I always just don't leave your day job quite yet. Let's go back and revisit the model. Where did we underestimate revenue? Did we overestimate expenses? And then, well, let's look at year 2. Maybe year 2 shows, oh my goodness, now I'm up to maybe a $60,000 profit, and by year 3, $160,000 profit. So it is really by far the most important document, because it helps us determine if we're going to open a business or when we should open the business. Because my attitude has always been, all right, if we're not ready to open it now, we'll be ready to open it in a month or a year or 2 months or however. So what's a nice segue? If you're going to borrow money, here are the 5 C's of borrowing. All right. Actually, there are 6 C's because I don't include character. I'll explain that in a second. So cash, that's the equity infusion I mentioned earlier, usually 20%, known as, if it's again, known as a skin in the game. Again, I've noticed over the years, bankers will want to ask maybe a little more from, hospitality industry businesses like restaurants or bars, because they're higher up on the list of people that don't make it. I mean, obviously during the pandemic, they got clobbered. Credit can be a deal killer. And I've seen this happen more than once over the last couple of years. We've put together a nice funding proposal, business plan, however you want to put it, really well done, well thought out. Come to find out, the lender refuses to provide the loan. Why? Well, because the client has a credit score of less than 600. Well, in my opinion, if you're not higher than 650, you're not going to get a loan. And that is pretty much the case for all the lenders. There are some other lenders, what are called lenders of last resort, that will go with lower credit scores, but as a result, the conditions of the loan may be not as nice as it would be otherwise. In other words, the interest rate could be higher, to give one example. Thirdly, collateral. That's the assets that can support the amount of the loan. So let's say you need $100,000, you come up with 20, you borrow 80. The question comes back, do you have anything worth $80,000 that you can pledge against the loan? Now, if you own your own home, it stands to reason, sure. Even even under much larger loan amounts, usually the house that the lender might take a second position on the house. All right. There's a lot of question as to whether or not this is a deal killer. In my opinion, my experience, a lot of businesses, well, a lot of clients will receive loans that are under collateralized or with no collateral because the rest of the application is so strong. Maybe more cash in, very high credit score, very well-written financial model with really good financial ratios. There are other aspects of your application to offset if you're down on one aspect. The last two here are the critical issues as far as I'm concerned: capacity and conditions. The capacity, which is in my definition, the ability to bring your plan to fruition, also known as experience. If you want to go back to the very first slide, or second slide, when we talk about attributes, background, experience, knowledge, that's what this is, capacity. And I consider this to be the critical element. You don't have experience in the industry. Well, number one, I would seriously question whether or not you should open a business in that industry. And number two, it's highly unlikely you would get anybody to loan you money without any experience. But you need, though, the point is, you need to have some experience, some capacity. And lastly, conditions: economic, technical, current business. Do they support your business idea? So I'm always trying to come up with an example that seems to be reasonable and not too obtuse. So I always go back to the same one about opening up a blacksmith shop. I've looked around Worcester and I can't find a blacksmith shop. So my feeling is, well, hey, there's no blacksmith shop here. I can make a killing because I can be the only one here. Of course, the question really needs to be asked: do we need a blacksmith shop? 100 years ago, well, or 150 years ago, yes, there are farriers around that will horseshoe and so on and so forth. But the time for blacksmiths have moved on. All right. Oh, I'm going to open up a factory and make 8-track tapes. I don't think so. The conditions don't support the business. So the economic, political, social, blah, 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 that has to support the business idea. Now, do you have to have all of these boxes checked off? Well, you don't have to, but obviously to the extent you do or can, it makes your application that much stronger. So something we need to look at as you plan to open your business. I didn't include character here. I don't want to suggest for 1 second character is not an important consideration, because it is. Years ago, I recall working with lenders and where loans were made based on a handshake. And that would be those character loans. In other words, the lender, the loan originator looks across the desk and at you as the client and says to themselves, "I trust that you will eat cat food before you don't pay your loan." And so that's character. I'm not going to walk away from this business. Well, today, most, if not all, of these decisions are made by a underwriting committee that may never see you, may never be able to determine or ascertain on their own the extent that you have good character. So it's important, but I don't include it in this particular list. As I was saying earlier, this presentation dealt primarily with Worcester, and I keep saying to myself, I've got to kind of revamp it a little bit to kind of broaden it, because we're opening this up to anybody around Massachusetts or otherwise. But a lot of towns, many towns, municipalities have incentive programs. So, for example, Worcester offers these three. And these are, well, it's actually the first two, facade and small business grant. These are deferred loans, and the economic development is a tax incentive. The facade program is forgiven if you are going to invest in the physical and aesthetic improvement of a commercial property. I believe the amount is $25,000, and well, it may not seem a lot to certain people, but on the other hand, it can mean an awful lot. I've had a number of clients use this loan because it's a win-win. It's a win for Worcester because it improves the aesthetics of the location, and it's free money to the borrower. Well, actually, it's not. You're not borrowing. It's a deferred loan it's forgiven as a grant. There's a small business grant program again, a deferred loan. If the business is going to occupy a vacant storefront in a targeted commercial corridor, you might have heard of hub zones, historically underused business zone. That would be, for example, a vacant storefront or targeted commercial corridor. Where we are located here at Clark, we're what is called Main South. That would be a targeted commercial corridor, and there again, it would be eligible for that grant program. Finally, there is the Economic Development Incentive Program. That's designed to be a tax incentive program based upon the extent to which it might hire or create jobs or hire people, or obviously stimulate business and growth in Massachusetts. There are, and I don't know if it's a result of the pandemic but at the very least, it's brought to our attention that a lot of grant programs are being offered by the state and by various towns, and it's something that you want to keep an eye on. In the old days, when people say, I want to get one of those grants, and I'd say, well, good luck, because they are very few and far between. But they do exist. It's incumbent upon the small business owner or entrepreneur who wants to start a business, go check out your town and where you want to locate the business, or maybe check out a town and say, well, I'm going to locate there if it has some sort of incentive program. You're all going to have to pay taxes. There are several types of taxes. So obviously you want to register with the state as a taxpayer. All businesses, with the exception of, again, I got to read this because I always get it wrong, with the exception of sole proprietors who do not file employment, excise, alcohol, tobacco, or firearms tax, must apply for a federal employer identification number, otherwise known as the EIN. What this means, basically, get an EIN. Just forget about this definition, because if you don't have an EIN, you're going to be required to use your social security number instead. And this EIN is for free, gets from the IRS webpage, and it's better to use this number than your social security number. And of course, you may be responsible for paying local taxes if you own real estate or business personal property. So, for example, I don't own a business in Sturbridge, but I have property in Sturbridge. Every year, I get not only the real estate tax, my personal property tax. So, if you own a business and you have assets, you check with the local town, because you may have a plethora of taxes, starting with the federal level all the way down to the local level. By the way, one thing is, forget, if you lived in New York State, you would have a county tax in addition to all the other taxes. Okay. Right. Yeah. So, if your business is growing, and in some cases your business will grow whether you want to or not. In other words, sometimes a business is going to seek its own critical mass, so to speak. You may have to hire employees. When you do that, that's a huge step. It's a big step. It's very, very seldom does a business stay a single employer. In other words, I own my own business. I'm the only employee, and that's it. Well, I mean, if I'm a novelist, I write books. Yeah, I can do that. Or if maybe I'm an artist or a sculptor. Yeah, I can do that. But I can't imagine any business that grows without hiring people, and that's where you must submit your income tax withholdings to the Department of Revenue, and you're responsible for that employment tax. You must also contribute unemployment insurance to Massachusetts and DC. You may have to provide workers' compensation if applicable. I have a client who's a consultant providing, basically his intellectual property. There's no workers' compensation needed here, but I have a client who paints houses, and I guarantee you, house painters need workers' compensation. So, and you must pay your portion of the employee's Social Security withholding, which is 50%. All of this is referred to, I use for the phrase fringe. As, I don't want to say fringe benefit. It's a fringe that it costs to the employer, which range anywhere from 8 to 12% of wage, or it could say averages 10%. All right, between the two. That means for every dollar of wage you pay your employee, it costs you an extra 10 cents to cover your obligation for federal unemployment, state unemployment, and your Social Security. All right. And this kind of begs the question, well, why wouldn't I hire somebody as an independent contractor and avoid the fringe? And the answer is the IRS has changed those rules dramatically. And without going into, I don't know if we have time to go into detail now, but it's pretty much a foregone conclusion that it's very difficult to hire properly an independent contractor today in Massachusetts as opposed to an employee. But remember, employees can be part-time, they can be seasonal, you can lay them off. So it's not as if you're going to be spending an awful lot of money for an employee as opposed to an independent contractor. As a matter of fact, with an independent contractor, typically you say, well, as an independent contractor, I'll pay you a little higher wage than I would if you're an employee. The result of which is it kind of becomes a wash. And by the way, before I forget, even before you hire somebody, remember, as if you're self-employed, you are an employee and an employer, which means you cover not 50%, but 100% of your Social Security. And of course, you don't have any 401k with a company match at this point. So I'm not trying to scare you away. I'm just trying to be, realistic. Remember, you're both an employee and an employer. So we're at the end of this program. So I just wanted to kind of indicate what our office location is and mention that we provide this free service to all of our clients. It's comprehensive, confidential, and it's free. And we have there are 4 people in this office that provide this free service, our advice to either an existing business owner or people who want to open a business. All exceptionally experienced individuals, highly competent. I'm being self-serving because I'm including myself in that group, but the other 3 folks are really exceptional. So if you want to have more detail, I'm certainly available, and our office is certainly available to help you. I guess, Sarah, we were scheduled to go to 11:30, so it is a little early. Am I correct? We're scheduled to go to 11? Okay. Are there questions that I can answer at this point? Because if there are none.
Hold on one second. Does anyone have any questions? Feel free to unmute yourself and ask.
Yes. Hi. Can you hear me?
Yes.
Billy Marshall. Yes, you have a question?
Yes, I do. And then I almost forgot it. Do you have any resources that you would recommend in writing up that business plan? I'm interested in a retail location, opening a retail store, kind of gift shop type of thing, but writing up a business plan, I get really stuck on that when I'm thinking, I don't even know what some of these products are going to be costing, because without my EIN, some places won't reveal their wholesale cost, things like that. So I don't know exactly what all of my products will be and what my profit margin would be. I don't know where my rent will be just yet. So I'm really stuck here and would love any resources you have as far as writing that business plan up.
Well, what you just described is something that it's not new. It happens all the time. So, and I'll try to give it a Reader's Digest version and not be long-winded. But one thing comes to mind is, again, another little statistic that's interesting. On average, people take about 5 years from the time they think about opening a business to the time that they actually take an active step towards doing it. So my feeling is people who are sitting on this webinar today have taken that active step. So I bet you if I asked everybody here, when did you start thinking about opening a business? It could go back 1 month or 1 year, it could go back 3 years, it could go back 60 months. It happens. So as I mentioned earlier, what does a typical entrepreneur have to do? They have to juggle many balls at the same time. What do I do first? And do I go file my EIN? Do I get my form an LLC? Where do I go? I think the first thing I would do, I would seek out a mentor, SBDC, SCORE, CWE, to work with you. Now there are software programs. We happen to use LivePlan in this office. I'm more of a traditionalist, being old-fashioned and gray. We build financial models on an Excel basis, and we will build a financial model, but one of the computer-based models we use is LivePlan, if we highly endorse it. But you have to start doing this research. So I think the place I would start first is just what is it that you're selling? And it's the fundamental, the value-added proposition, that fundamental value-added proposition. What am I selling? To whom am I going to sell it? Who do I consider my target market? Why would they buy it? I mean, if you start with why would they buy it? Why do they buy it? Because we're the new kids on the block. I'm doing something different. I'm inventing cold fusion, or I'm providing the new mousetrap, or I may be providing a product that is old as the hills, but I'm selling it cheaper. Why? Because I'm willing to take a smaller margin than the industry norms. So there's lots of different things to do at the same time. You may find, oh, I located a place in Auburn that is fantastic. So I'm going to open a business there because I know I'll be successful. What business? Well, I'm not sure yet, but I know this location is fantastic. Or, hey, I've got a great product, but I don't know whether I should sell it from home or sell it from a retail location. It requires research, requires a little work. Let's say you identify a retail location, and okay, now I have to do the proverbial build out. In other words, I have to go in, it's got to be painted, I got to put new floor in, plumbing, electric, and who's going to pay for that? I have a contractor coming in, but if the owner of the property is willing to, they should pay for whatever is permanent, and I'll pay for whatever is not permanent. But it depends upon the marketplace. If it's a buyer's market or seller's market, that will, to a large degree, determine how that paying process will work. Lots of different questions, and it can be very confusing. I find that it's best if you have somebody to work with that can keep you on that straight and narrow. I use the business plan, the concept of the business plan, as the paradigm. That's it's kind of like our textbook. Our guides us. All right, what's our target market, competitive set, managerial structure, and then we get into it. If you hire people, there's a whole section on human resources. How do I hire people? How do I fire people? How do I do performance reviews, and so on? Lots of different things to be done. It's not easy, but there is a process, and it can be applied to starting a business. So I say, when in doubt, I'd say, well, how about starting with how much does it cost to start my business? What do I need? What do I need to purchase? What do I currently have? And what do I need to buy in order to start this particular business? But if you don't know what it is that you want to sell, well, then we're much farther away from actually getting close to beginning that planning process. We have to really come to grips with what it is I'm selling. So I don't know if I answered your question, but there it is.
Thank you. Yeah, you did. It's one of those things where I can find, expenses for the bookkeeper. I can find the expenses or estimated bookkeeper expenses if needed, or an estimated employee salary, estimated POS systems, things like that. But when it comes down to not having that employee identification number yet, anyone I'm purchasing wholesale from, it's a little difficult sometimes to get those prices, to know what the products that I want to carry, what my profit margin are. And I know the products, it's just getting that information. So sometimes it's a little hard when I think about writing that business plan. I get stuck, or it becomes a little discouraging.
Right. Well, you can, I believe, go form, you could form a sole proprietorship, which would, and it depends upon the town. In some cases, I believe some towns don't charge anything, but I think most towns charge a small amount. Auburn charges $70. I know some other towns charge as little as 30, maybe 15. Form a sole proprietorship, go get an EIN. Okay. Now opens up the doors to do a little research. And now when you're getting ready to really open your business, you can maintain the sole proprietorship, or you can disband it and now go to an LLC if you like. Or you can go form the LLC and go back to the sole proprietorship. There are a number of steps you can take to kind of get to the information you need to determine, am I starting a business or am I not starting a business? And again, as I say before, can't say it important enough. If you have a day job, don't leave it. Stay with the day job. Now start your business. And then as the business grows, the question will inevitably, you'll have to address, do I stay with my day job? Do I go to my own business? Usually it's go to your own business.
Got it. Thank you.
Sure. Thank you.
Anybody else?
Anybody else? Well, I want to say thank you very much for attending. I know, Sarah, do you want to go over what's next here, if you could?
Yeah, I put a couple of links in the chat. And again, I do apologize for the technical difficulties today when I got bounced off. I'm going to send a follow-up email with a copy of the slide deck. Also, I'll put in the link again for our survey, and also the link if you're interested in one-on-one registering with one of our advisors. That's something we offer as well. So I will do a follow-up email to everybody shortly.
Well, thank you very much, Sarah. And again, thank you all. I wish you all the best of luck. This is, whatever it's worth, 67% of the population will form a business at some point in their life, which goes to the heart of being a capitalistic society. I think it's a wonderful thing. Is it meant for everybody? Not necessarily, but you'd be surprised how successful you can be if you follow the right model, follow the right path. So I wish you all the best of luck. We'll end the show now, and hopefully maybe one or more of you guys might show up and we can work with you as you move towards opening your business. Okay. Thank you all. Have a wonderful 4th.